Hi everybody, and welcome back to FANG Friday. This is Ross Healy, the chairman of Strategic Analysis Corporation and a senior portfolio manager at McNichol & Associates Asset Management. Well, it's nearly the end of the year and, I suspect, the end of the market rally. The market certainly gave the bulls a kick in the shins this week with a big setback after Powell told everyone what he'd been already saying for some time, only people increasingly tuned him out. "Read my lips, you knotheads," he said. "I'm not going to ease up until I'm ready to ease up. Not when you think I should, and not when all those economists say I should, who don't seem to be listening either." You know, Powell brought to mind my third-year econometrics professor. I remember when some student asked what he meant by a point that he had just made, but which I can't recall now. And he replied, "All I can do is say it again, only this time louder." Looking at the overall market, the Standard & Poor's had climbed up virtually to its super growth price, that's 3.5 times book, in anticipation of a great buying opportunity in a breakout. But then it had nowhere to go, but right back down again. Looking at the FANG stocks in retrospect, it's almost as if they too had climbed up to key levels and were just waiting for the Fed's signal to act. It is really quite remarkable when we put it all together, as we're going to see in a moment. Now, our clients knew all this would happen because we had provided them with accurate, up-to-date charts on the major North American indices using SVA methodology. So it was no surprise to us. This is one of the advantages of joining our service, especially in a bear market. Speaking of which, remember I said that early this January, specifically January the 6th at 4:15, I would be conducting a free and public, full-scale, hour-long introductory webinar that outlines our service and its underlying methodology that you can attend live for free. We're running out of spots, and the last day to register is next week. So, if you would still like to attend my free public webinar, send us an email with your full name to info@strategicanalysis.ca. With the market just coming off that critical breakpoint, given the immediate uncertain markets, the stakes are much higher than ever before. So, if you would like to join us as a client before the January webinar, we do have an exclusive offer to try out our service at a reduced rate. Go to www.strategicanalysis.ca/pricing and take advantage of this limited time offer by clicking on Inside Edge. When you sign up, you get immediate access to our database of almost 3,000 proprietary SVA charts, along with many of the service features, plus an electronic copy of my book, Inside the Market, which explains how the SVA methodology works. All clients who are joining us get a personal one-on-one introductory session with me, which usually lasts an hour or so, where I will go over how to use the system to better improve your returns. But please note, and let me say it again, in the interest of full disclosure, SVA is a do-it-yourself service and is therefore not for everyone. It takes time and effort to become comfortable with the service, although for those of you who have been faithful FANG Friday viewers for some time now, I suspect that you've got a pretty good idea of what's involved. If you're ready to take that next step now, it can be a tremendous benefit to your investing future, as I hope I will continue to show you today. Now, Before we take a close look at the FANGs and what's going on, as always, I do like to say thanks to everyone who likes this video and all our subscribers. Okay, let's start off with Amazon, and in this lovely rally that we've had, Amazon has kind of been, we can best describe as a bystander. It's moved sideways, but it has certainly not been a participant. And with the resumption of the downtrend, I suspect that the stock has lower to go. First step is down to the mid-super growth price. That's 5.5 times book value, which is about $80. But the step below there, it takes us down to 64. So we have to be very careful about Amazon. And on top of it all, we note that the fair market value, the earnings forecast and the fair market value are taking another step down. Alphabet, well, Alphabet actually did rally nicely, back up to its low super growth price, 4.5 times book value, has broken out, but has been kind of moving back and forth there. And I think it needed a signal from Powell that it was okay and we could go. He didn't get it, and or we didn't get it, and the stock has indeed broken below the LSG price again. Almost the same story with Microsoft. Again, a nice rally up to its HB1, or 9.5 times book, but it too has pulled back now to its HB1, and I would not be surprised if the stock broke and would get to my ultimate target, which I've been talking about for some time, its bubble price. Tesla, well, remember I had described Tesla as kind of walking downstairs, HB4 to 5, HB3 to 4, HB2 to 3, a rather feeble rally, if I may say so, over the HB2, but it has broken clearly and looks now to be heading lower, and maybe much lower. NVIDIA has had a beautiful rally, right off its HB2, and has hit now its HB4. That, by the way, has been a gain of about 80%. Unfortunately, we didn't actually see that bottom until in retrospect, and therefore we never actually got an immediate buy signal on the stock at the time. However, given the outlook for the semiconductor industry and the economy as a whole, I would not be surprised if the HB4, about 20 times book, is about it for the stock. Meta, having fallen some 73% from its bubble price down to its growth price, it's a 2 times book. They're a little bit below here, but that's on a sort of the tail end of extreme. Has rallied perfectly up to its mid-growth price, and look at that, bang, bang, bang. Has not been able to break out below there, and I would be watching very carefully to see if it can, because you can see that the earnings and therefore the fair market value have taken a sharp turn south. I would be very cautious and very careful about Meta right now. Netflix, this is so interesting. Look at that. If I connect the dots here and the bottom for Netflix before the bottom fell out of the stock, you can see that that gap due to the huge earnings disappointment in the second quarter has now been closed. Now, yesterday the market, or the Netflix actually, was off some almost 9%. It's up a little tiny bit today, but I don't know whether the stock will actually be able to finish moving to the bubble price or whether closing the gap has been it. If it does manage to break out from here, it is not going beyond the bubble price, however. Finally, Apple. Well, you know that the problems that we've had with Apple, and if I extend this downtrend line, okay, due to the share buybacks, therefore we get a target of roughly maybe 132 before the stock breaks its own HB6 price, which is 33 times book value. Now, in summary, with what we have just looked at, I have a suspicion that it's time for investors to return to all those horrible things that no one likes to talk about. You remember, don't you? The basic fundamentals like the balance sheet, PE ratios, what's really going on as opposed to what we all hope is going on. Well, what does the market hope now? Well, that it can go back to the good old days of 2009 to 2021, when all you had to do was buy any of the FANGs and a whole bunch of other dreamscape stuff as well, and they would just go up endlessly. Gosh, those were great days. For the past year, however, we've been having a gut check, and it has not been all that much fun, has it? Although, for those of our subscribers and viewers who have followed FANG Friday, it actually hasn't been all that bad, has it? We've managed to miss almost all of the carnage among the FANGs, and we've even managed to catch one or two of the bounces as well. This has actually been a pretty good year. And it would be better still had you gone short the FANGs that SVA told you to get out of. I do not recommend short selling in our client service, so I did not raise that issue, but the opportunities were there, and there in spades. The question is now is, well, Ross, 2022 was nice, but what are you planning to do for me now? Well, the rally in the NASDAQ 100 has been far less dynamic than the rally in this what are called value stocks, which is highly reminiscent of what happened in the collapse of the high techs in the 2000 to 2002 market. Until the NASDAQ 100 offers good investment value again, it is difficult to be optimistic for the long term about any of the FANG stocks. However, there have been and there will be good trading opportunities. Indeed, dare I say it, great opportunities ahead. But you need to stay in touch with the values here. Although I have to emphasize, I am talking trading values, not investing values. Last week, I noted that the FANGs fell loosely into 4 categories, going nowhere but probably down, holding just at critical breakpoints with fingers crossed, but not looking too good. Hit bottom, maybe. Hopefully, maybe. And then, off the top, Amazon wasn't even trying. It had a miserable sideways rally of sorts. But the game is over, folks. $80 is coming up, but $65 and maybe worse looks to be in the cards. Alphabet, Microsoft, and Tesla were clinging like cloth to their critical breakpoints, but that was the best I could say about them. I observed that I would not choose to own any of them on a bet. And I admonished you to watch these 3 stocks very closely. If they all struck out together, which I suspected would happen, there would be no joy in Mudville. Well, guess what? They all struck out together, especially Tesla. Elon Musk has made off with some $40 billion of your money, all at higher prices, and I'm sure that he's laughing all the way to the bank. However, speaking of paying too much, he can now pay down any loans outstanding for his ill-advised and very expensive purchase of Twitter. The market giveth and the market taketh away. Early this week, Netflix closed that huge trading gap that followed its second quarter disappointment, but that may be all. It may still be the top dog in the streaming world, as we were recently reminded with the release of its absolute streaming numbers, but earnings and profitability are slipping. Meta had a nice rally up from its growth price, or 2 times book, to its mid-growth price, 2.5 times book, with precision, and is now setting back. That plunging fair market value line is disconcerting, and I suspect that one is gambling if one is trying to predict its ultimate lows. The stock has a strong balance sheet, and Facebook is doing well. It may have hit bottom. However, I don't know that this stock can go its own way alone for long without the rest of the FANGs. NVIDIA has had a superb rally from its lows and has risen all the way up to its HB4 price, or 20 times book. I'm sorry that SVA missed the bottom at what turned out to be its HB2 price, but as I showed you at the time, that low was only evident in retrospect, not at the time. Much as I might feel remorse for missing that low and the subsequent beautiful trade, the trend of values here, the apparent downside risk, and the industry problems mean that I actually have very little regret. Finally, Apple remains everyone's favorite stock, and their share buyback program is keeping the stock valuation higher than it actually merits. I may not care for the stock at these extreme levels, but I certainly do not fight City Hall. Having said that, I hope that I showed you what I am watching for, either in support of the stock or its trading demise. Be aware, the NASDAQ 100 has not found a sustainable low yet, and I need to emphasize that I have never seen a solid market bottom that has not come until after one of our key SVA breakpoints has been reached. I promise you that a really good one does lie ahead, however, so I suggest that you stay tuned. To answer your question that I raised above, what am I going to do for you now? Well, don't forget to put in your webinar registration if you'd like to see all the details of how SVA actually works and why. We will not be having a FANG Friday webinar during Christmas week. That is, unless something untoward happens. But I will be back next Friday when I will look at our performance over the past 12 months. For now, this has been Ross Healy, the chairman of Strategic Analysis Corporation and a senior portfolio manager at McNichol & Associates Asset Management, reminding you that nothing, including investing, is difficult if you have the right tools. I'll see you next week.